Hello and welcome to the weekly market metrics. I'm your host Samdarsh and we're in week 7 of 2026. Last week I started by saying that it was both a good and a bad week. But this week I would say that it was a bad week. Not just in Indian equity markets, globally as well, even in commodities markets. See, the sentiment is generally negative due to an AI related fear. Up until now, the assumption was that the impact would be to information technology led companies. However, now it seems that the impact could be across sectors. Also, we had assumed that it was the India-US trade deal that was holding an uptrend back. But it looks like the market has more things to worry about. Anyways, let's check the charts and see how the price action played out this week. We'll also look at what is possible in the upcoming week. As always, let's start with Nifty. Coming to the Nifty's weekly time frame, after last week's strong green candle, we were hoping for continuation on the upside, but the market continues to chop on almost all time frames. There has been no clear trend since August 2025 and the pain continues in February 2026 as well. For the week, Nifty lost 222 points or 0.87% and it made a range of 565 points or 2.2%. The supports are at 24,700, 24,600 and then 24,400. Resistance is at this week's high, which is at about 26,000 and then at 26,340. The bias is negative to sideways until we get a close above this week's high, which is at around 26,000. Let's now talk about the daily time frame. See, on the daily time frame, that the market goes up in steps and comes down in an elevator. Monday, Tuesday and Wednesday were the green steps, while Thursday and Friday were elevator-like moves, printing red candles. Nifty is 336 points away from filling the gap made on 3rd Feb following the India-US trade deal announcement. Now, will it fill the gap in the upcoming week or will it remain unfilled for a long time? We shall wait and watch. Nifty is right at the support zone of 25,450 and once that is taken out, we can see the levels of 25,100. Resistance is at the gap between 25,630 and 25,750 and then at 26,000. Moving on to the hourly time frame, on the 1 hour time frame, Nifty spent most of the time above the 50 EMA but went below it with the Friday's gap down and continuation. The index did not chop around the EMA, but even the long trades were not able to realize material gains. For short trades, the level of confidence is always low, as short trades work less often compared to long trades. However, let's see if Friday's down moves tend to get a follow through. Moving to Nifty's range till expiry. Nifty's 2DT ATM Straddle premium closed at 239, which is now pricing in a 0.94% move on either side. Compared to last week, the Straddle premium has increased sharply both in absolute and in percentage terms, up from 207 to 239, which is a rise of 32 rupees, and from 0.81% to 0.94% in implied move. Now that's a clear expansion in near-term volatility expectations going into expiry. Based on the current straddle pricing, the expected range till expiry is on the upside 25,710 and on the downside 25,232. Now moving on to the open interest, for the upcoming Nifty weekly expiry on Tuesday, 18th February, with Friday's down move, we are seeing maximum open interest on the call side. 26,000 has the highest OI, followed by 25,600 and 25,800. Even 25,500 call has decent open interest. On the put side, 25,000 and 25,500 have noticeably higher open interest. So on the upside, there are many resistances, and on the downside, not many are willing to be contrarian and bet against the direction by taking put shots. Now I know that I have oversimplified it a bit. Next up is SENSEX. Let's first talk about the weekly time frame. On the weekly time frame, Sensex lost 954 points or 1.14% to close at 82,627. The range for the week was 1,953 points or 2.3%. Now that's a relatively contained range compared to the recent volatility. Support levels are seen at 80,400 and 79,900, which is the budget day low, while the next key resistance sits near 84,500, which is this week's high, and then at 85,800. Let's now talk about the daily time frame. On the daily time frame, similar to Nifty, Sensex is approximately 800 points or 1% away from filling the gap made on 3rd Feb. Sensex printed 2 green and 3 red candles this week. Immediate resistance is at 83,250 and then 84,500 and 85,760. On the downside, support is at 81,700 and then at 80,400 and 79,900. Now moving on to Sensex's range till expiry. The next weekly Sensex expiry is on Thursday, 19 February 2026. The ATM straddle closed at 1,027 points, which implies a 1.24% move on either side. This implies an expiry range of, on the upside, 83,650 and on the downside, 81,600. Since the Sensex expiry is still 4 days away, these levels may not hold as well as Nifty levels derived using the ATM straddle premium. Moving to Bank Nifty now. Let's talk about the weekly time frame first. On the weekly time frame, Bank Nifty gained 66 points or just 0.11% from last Friday's close, ending at 60,187. Bank Nifty made a high of 60,876 this week but slipped sharply to a low near 60,074 before closing at 60,187. From the high to the low, the index made a range of 802 points or 1.32%. Resistance is now seen at 60,900 and then 61,765. Immediate support stands at 60,100 and then at 57,800. Now coming to the daily time frame. On the daily time frame, supports are around 60,000, 59,600 and then at 58,240. Resistance is at 60,900 and 61,400. The price was holding well until Thursday, but the broad selling across indices on Friday pulled Bank Nifty down as well. Let's see if this is the index that will be the first one to recover when the broader market recovers. Now moving on to the hourly time frame, Bank Nifty went below the 50 EMA on Friday. From Monday to Thursday, it was trading above the EMA. No directional move happened this week except that the index mostly stayed around the EMA. Talking about market breadth, it seems it's right in the middle zone. So not much of a signal from the breadth at the moment. Price is what we would have to follow. Moving to ROC, in week 7 of 2026, just one index, that is the Bank Nifty, closed in green and the rest all closed in the red. Year to date, only Bank Nifty is in the positive territory with a gain of 1.02%, while Nifty, Midcap Nifty and Sensex are down 2.52%, 3.18% and 3.04% respectively. Talking about sectors this week, while most indices were in the red, there were significant trends in select sectors. Nifty Media topped the charts this week, up 5.18%. It was followed by PSU Bank at 3.27% and Auto, which continued from last week, at 2.6%. Financial services was up 1.15% and lastly, Pharma gained 1.06%. If stock picking is your style, these are the areas to look at. Also, we are seeing Nifty Media in the list after a very long time. Do let me know in the comments if you know what was the trigger that made the index rally this week. Talking about range and expiries, Nifty's 5-day average daily range is back below 150 points after doing 2 times of it the previous weeks. Not a single day this week had a range of about 200 points. Friday saw the highest range across all indices. The weekly range has also cooled off for all indices. All this is happening while India VIX is rising, so it means that the expected volatility going forward is slightly higher. Let's talk about Nifty's Tuesday weekly expiry on 10th February. It made a range of just 119 points with an opening straddle premium of 104. The index moved 109 points from the low in the first 1 hour or so and then went sideways, except for giving some 100-point swings post 1 PM. It was a relatively calm expiry with very low premiums compared to the previous weekly expiry of 3rd February, which had one of the best premiums in a long time. Now moving to Sensex weekly expiry on 12th February. The index was in a narrow range of 400 points until 2:15 p.m. and then gave a sharp move on the downside of 300 points, quickly recovering 250 points. The premiums were not so great, with the ATM straddle priced at 300 at the open. It was still a decent expiry for option sellers who prefer to keep their trades morning heavy. Now moving to India VIX for the week. It spiked 11% this week to close at 13.29. What caused India VIX to spike? It must be the sharp down move and the global sell-off from Thursday. A higher VIX means higher premiums, and it also indicates higher expected volatility. Let's see what we have in store next week. Now moving to commodities this week. It was one of those rare weeks after a long time when we had both equities and commodities, especially precious metals, also down. Gold stood most resilient at minus 1.03%. Next was crude at minus 2.82%, followed by silver at minus 3%, copper at minus 4.7%, and natural gas at minus 9.58%. Now, will precious metals make new all-time highs? Let me know what you think in the comments. Now, to summarize all of this, week 7 was largely negative across global equities and commodities, with AI-related concerns and broad selling affecting overall sentiment. Nifty and Sensex remained choppy and weak, continuing the sideways structure seen since August 2025, while BANKNIFTY was the only index to close slightly in the green. Now sectorally, media and PSU banks stood out, and maybe select sectors is where action is going to be, but overall market structure remains weak to sideways. Moving on to what caught our attention this week, we have two interesting reads for you. First is this interesting report by Oaktree Capital, which claims that markets are currently defined by a K-shaped dispersion where headline averages mark a sharp divide between AI-driven winners and fundamentally struggling laggards. This environment rewards active selection over passive indexing, as high yields in credit and concentration in equities punish those who rely on broad market averages. Next up, we have an interview of Alistair Nain, one of the founders of Edinburgh Partners, a fund management firm which was taken over by Franklin Templeton. He has some deep insights to share about the whole battle between AI firms and Google. If that space interests you, this is a must-read interview. And as always, links are in the show notes. Now over to what to expect in the upcoming week. Next week is a 5-day trading week, and on Monday, 16th of February, we have WPI, that is the wholesale price inflation announcement. Based on the announcement in November, WPI was down. Let's see what's in store this time. Talking about the markets, equities look weak at the moment and commodities look a bit overbought. Tough times is what it looks like. As traders, all that we can do is hold on to our capital and keep position size in check. This too shall pass, as they say. And with that, we wrap up this week's weekly market metrics. If you find this series useful, don't forget to subscribe the channel. Until then, stay curious, stay steady, and enjoy your weekend.